what does it actually take to build infrastructure that, really lasts? Not just for today, but for decades down the line. Think about something as fundamental as the energy grid. How does a company build that backbone for, say, 50 years and then figure out how to power the next 50? Today, we're doing a deep dive into Rajesh Power Services Limited RPSL. They're an Indian company that's been right at the heart of building the country's energy infrastructure. We've been looking through their recent annual report, other company documents, that sort of thing. And our mission today is to really pull out the key insights. We want to understand their main business areas, get a feel for the wider industry outlook, power transmission, distribution in India, and look at their plans for the future. Plus, the risks they're dealing with. Think of it as your guide to understanding this really vital sector. Okay, let's unpack this company and its place in India's energy future. So, Rajesh Power Services Ltd, RPSL, they're not exactly new kids on the block, founded way back in '71 in Ahmedabad, Gujarat. That gives them, a 54-year history? Pretty impressive. And they're known as a top turnkey EPC player.
Right, EPC, that's engineering, procurement, and construction. Basically, they handle big projects from start to finish in power transmission and distribution.
Yeah, exactly. And they've got a fair few people working there, over 1,300 now. The last financial year, 24-25, was huge for them as their first year being publicly listed.
And that IPO, their initial public offering on the BSE SME platform, it went really well, didn't it?
Oh, absolutely. Massively successful. I mean, the issue was oversubscribed nearly 60 times overall.
Yeah.
That's huge investor confidence.
Yeah, huge. And it shows confidence not just in RPSL, but, in India's whole energy infrastructure story.
Definitely. And the market debut backed that up. The shares listed at something like a 90% premium over the issue price. Just stellar.
Wow.
And then you look at the financials for that year, really solid. Consolidated revenue jumped to over 1,100 crore rupees.
Which is, nearly 300% year-on-year growth? That's kind of staggering.
It really is. And EBITDA, their operational profit measure, also shot up. Over 130 crore, good margins too.
Profit after tax nearly tripled as well, right? Around 93 crore.
Yep. And you add in strong returns on capital, return on equity, very low debt. It paints a picture of a company in really good financial shape.
And they got their credit rating reaffirmed too with a positive outlook. CRISIL BBB+, that matters.
It does. It all points to stability and strength.
What's fascinating, I think, is how fast they turned that IPO success into these strong numbers. It really shows the market believes in their basic model. But it makes you ask, okay, how did they achieve that growth? What exactly are they doing on the ground?
Right. You can see why they're making waves. But yeah, let's dive into the nuts and bolts of their operations. What are the core things that drive this? So RPSL basically works across two main service areas. They're distinct, but, they fit together. First is turnkey EPC solutions. Second is operations, engineering, and maintenance. OEM, for short.
Okay, so EPC first. That's the big project side.
Exactly. End to end. They do the design, the engineering, buying the stuff, building it, and getting it running. Commissioning. And they cover the whole voltage range, extra high voltage, high voltage, medium, low voltage, underground cables, transmission lines up to 220 kV, substations too, both GIS and AIS types.
So they handle pretty complex high voltage projects. What makes them strong in that area?
Well, a few things. In Gujarat, they're apparently one of the biggest providers for those EHV underground networks. They use trenchless tech, which is a big deal. In cities, less digging, less disruption.
Yeah, okay. That's smart for urban projects.
Yeah. Plus, they have their own in-house design and execution teams, which gives them control. And, 54 years builds a reputation. These projects directly strengthen India's grid, make power more reliable. Think big underground cable projects, major substation installations.
And those ratings you mentioned, Class AA and Gujarat A elsewhere.
Right. That signals their capability, the quality standard they meet. It's like a stamp of approval from the states.
Got it. So that's the building part. What about the OEM side, operations, engineering, and maintenance?
So this is about keeping things running after they're built. Whether RPSL built it or someone else did. They offer full OEM services for solar plants, substations, distribution systems. The goal is maximum efficiency, maximum reliability.
Like keeping the power flowing smoothly, 247 support, fixing faults quickly.
Exactly. And they've done something pretty innovative here, too. They pioneered these area-based, city-focused OEM contracts.
What does that mean, area-based?
Like They take responsibility for the maintenance and operation of the distribution network within a specific zone of a big city. They mentioned Ahmedabad, Gandhinagar, Mumbai.
Ah, so a dedicated focus for critical urban areas. That makes sense for reliability.
Yeah, it seems really targeted. So they're building the new stuff and keeping the existing stuff humming along. But what's really setting them apart, how are they managing all this so efficiently?
Yeah.
Is there a secret sauce?
Well, if you connect it to the bigger picture, their asset-light model is probably a big part of it. It's quite a strategic advantage in this industry.
Asset light. How does that work in construction and infrastructure?
Basically, they focus heavily on the EPC, the engineering, the project management, the consultancy, rather than owning vast fleets of heavy machinery or huge warehouses full of materials. They leverage third-party suppliers for a lot of the equipment and materials procurement.
Oh, okay. So they don't tie up loads of cash in owning expensive gear.
Exactly. It reduces their capital tied up, makes them more agile, they can scale up or down for different projects more easily, and respond to market needs faster without huge fixed costs.
Lower investment, potentially higher margins. Sounds smart.
It is. It allows for more flexible execution, especially on large, diverse projects. It's a clever way to grow in a very competitive field.
That makes a lot of sense, yeah.
Yeah.
Especially when the market's growing so fast. Okay, so that's their current setup. But what about the future? What's their blueprint moving forward?
They seem to have a pretty clear strategic roadmap. It's focused on, well, sustainable growth, using more advanced tech, and really leaning into innovation.
Like what specifically?
Key things are expanding geographically, getting into more states across India, also diversifying their customer base so they're not just reliant on government work, and crucially, boosting their skills in solar energy and green hydrogen. Those are obviously massive for India's energy transition.
Right, tapping into the renewables push. Makes sense.
And they're putting a lot of emphasis on integrating advanced technology into their solutions.
Okay, that roadmap mentions technology.
Yeah.
And they invested in a company called HKRP Innovations Limited. What's the story there? Is that a big piece of the puzzle?
Oh, yeah, that seems very strategic. They own about a quarter of HKRP, which is a company focused specifically on smart energy management solutions.
Smart energy. Like what?
HKRP developed custom IT solutions for the energy sector. Think power grids, renewables. They use tech like IoT, the Internet of Things, cloud computing. Their products cover things like smart feeder management, advanced distribution management systems, even GIS mapping. It's about making the grid intelligent.
So using data and connectivity to manage power better.
Precisely. And HKRP already has a significant footprint. Thousands of industrial IoT systems deployed, monitoring a large chunk of India's energy infrastructure. They did a major project for IGSO in Gujarat, centralizing monitoring for over 1,500 substations onto one SCADA platform.
SCADA. That's like the central control system for the grid, right?
Yeah, essentially the nerve center, real-time monitoring and control. So that HKRP project was one of the biggest of its kind in India. This digital capability is absolutely vital for modern power networks.
Wow. Okay, so that's a serious digital play, definitely future-focused.
Yeah.
But let's zoom out a bit. What does all this mean in the context of the wider Indian power sector? What's the landscape RPSL is operating in?
Right. The Indian power T&D sector transmission and distribution is fundamental. It's the highway system for electricity, getting it from power plants to, well, to you. Transmission is the long-distance high-voltage part. Distribution is the final delivery, lower voltage, to homes and businesses.
Okay. And how's that sector doing overall?
Well, on the transmission side, the high-voltage network expansion actually slowed down a bit recently. Fewer new lines were added last year compared to previous years.
Oh, why is that?
Mostly challenges with getting right-of-way, basically, permission to build lines across land, and issues around compensating landowners fairly. That created bottlenecks.
Land issues. That sounds familiar for big infrastructure projects.
It is. But there's good news. The government revised the compensation rates recently, which should help ease things. And we saw a big chunk of last year's new lines actually get finished right at the end of the year in March.
Maybe the log jam is starting to break.
Looks like it. Things seem to be accelerating again. Now, on the distribution side, the progress has been pretty remarkable.
How so?
India's cut its energy supply shortfall dramatically over the last decade. It's down to almost nothing now. Power availability, especially in rural areas, has massively improved.
That's a huge change. What drove that?
Key government schemes have made a big difference. things like the revamped distribution sector scheme or RDSS, which aims to cut losses. Others focused on strengthening the network itself and improving the financial health of the distribution companies, the discoms.
Okay, so real improvements on the ground. What about looking forward? What's the plan for T&D investment?
The plans are huge. The National Electricity Plan for Transmission maps out massive spending. We're talking potentially over 9 trillion rupees. That's like over $100 billion
Yeah.
by 2031-32,
Trillions. What's that money for?
adding nearly 200,000 circuit kilometers of new transmission lines, massively increasing transformer capacity, adding lots of high-voltage DC capacity, too. It's a huge build-out. And what's driving it is partly the move towards competitive bidding for projects, which brings in private players like RPSL. Also, a big push for technology predictive maintenance, using AI, using drones for inspections, creating digital twins of the grid.
Digital twins, like a virtual copy.
Exactly, to model and manage it better, and crucially, getting the grid ready for all the renewable energy coming online. Specialized centers are already monitoring tens of gigawatts of renewable capacity.
So massive investment, modernization, getting ready for renewables. It paints a picture of enormous opportunity for sure. But, where there's that much change in investment, there are usually big challenges too. What are the main hurdles RPSL and others in this space are facing?
Absolutely. Opportunity comes with risk. And RPSL seems aware of this based on their reporting. They identify key risks and talk about how they're mitigating them.
Okay, like what are the big ones?
Well, one is definitely the high working capital requirements. These big infra projects just soak up a lot of cash up front. That can strain finances, maybe delay work.
Right, so how do they manage that cash flow crunch?
They specifically mention using funds from the IPO to help with working capital. They're also focusing on tight financial management, strict forecasting, controlling inventory, chasing payments efficiently, and being selective about which projects they take on.
Makes sense. What else?
Another is their dependence on government contracts. Historically, that's been a big chunk of their business, but if government spending priorities shift, that could hit their revenue.
Yeah, relying too much on one type of customer is always a risk. So diversification.
Exactly. They're actively trying to win more work from commercial and industrial customers, the C&I sector. Plus, expanding into other states helps spread the risk. And their move into solar and green hydrogen also diversifies their service offering into new growth areas. Oh, and having a big, healthy order book currently over 3,600 crore provides a buffer too.
Okay, so diversifying clients, regions, and services. Smart. Any other major risks?
Technological disruption is always a factor in tech-heavy industries. New grid technologies could emerge, making current approaches less relevant.
How do they stay ahead of that curve?
Well, that investment in HKRP innovations is key here. It keeps them plugged into IoT and cloud-based grid solutions. They're also specifically setting aside funds to build expertise in green hydrogen, and they emphasize continuous training and R&D to keep their own technical skills sharp.
Right, staying current. One more.
The last big one is simply intense competition. There are other large EPC players out there, bigger companies sometimes. Fighting for market share is constant.
How does a company like RPSL compete against potentially larger rivals?
Here's where that asset-light model comes back in. It gives them cost efficiency and flexibility, which can be a big advantage. They also focus on building long-term relationships with clients. And by enhancing their services with that digital integration via HKRP and focusing on renewables, they can differentiate themselves, offer something competitors might not.
So leveraging their agility, relationships, and pushing innovation to stand out, it sounds like they've really thought through these challenges.
It seems that way. They're not just acknowledging the risks, they appear to be actively weaving mitigation strategies into their core business model. It's about building resilience.
Yeah, it definitely seems like a proactive approach, using their strengths, that asset-light model, the HKRP investment, to navigate the potential bumps in the road. Okay, so let's wrap this up. We've taken a really close look at Rajesh Power Services Limited today. We saw their journey, that long 54-year legacy, the successful IPO, and then that really exceptional financial growth just last year.
Strong performance.
We unpacked their two main business lines, the big turnkey EPC projects, building the grid, and the OEM services, keeping it all running smoothly, especially with that innovative city-focused approach.
Both vital parts of the energy puzzle.
And their future strategy seems clear. Geographic expansion, client diversification, but really doubling down on digital innovation through HKRP and pushing hard into renewables like solar and green hydrogen.
definitely positioning themselves for India's energy transition.
And importantly, we looked at how they're tackling the inherent risks, managing working capital, reducing reliance on government contracts, staying ahead of tech changes, and competing effectively using that asset-light, flexible model.
A clear risk management framework seems to be in place.
So hopefully this deep dive gives you a really solid understanding of a key player in India's absolutely critical power sector. Whether you're looking at it from a business angle, an investment perspective, or you're just curious about how this stuff actually works. It leaves me with a final thought, though. You see India's huge energy goals, the massive investment needed, right?
Yeah, the scale is immense.
So could RPSL's approach being asset-light, really focused on innovation and digital integration, could that become a kind of model, not just for other infrastructure companies in India, but maybe globally, for companies trying to navigate these complex, fast-growing, transition-focused markets? Something to think about.